Hi, my name's Tom Vedtreska. I'm the founder of CompuTrade Systems.
And my name's Rachel from MarketEdge.com.
Today, we're going over a couple market timing indicators that I feel are very important.
Yeah, walk me through it.
Okay, let's go. So, Rachel, let's go down to the weekly market letter, pull it up, and we'll take a look at these. Now, every Friday, we produce a weekly market letter, which has a brief summary of what happened in the stock market the week before, and also our outlook. Now, to get our outlook, we use a series of market timing models. See what it says market timing models? So these are our three main market timing models, our CTI, our momentum, and our sentiment. Underneath are the strength indexes. Right? They're either positive or negative, but there's a little more than that that's involved here. I built this about 30 years ago on telling you whether an index is under accumulation or distribution. For example, the Dow has 30 stocks in it. The NASDAQ has 100, and the S&P also has 100. And the current reading to the right is the percentage of those stocks that are under accumulation, which is bullish. And then you have the prior week, what they were, and then you have the connotation for this week. So if they're over 50, we regard it as bullish, as positive, simply meaning that over 50% of the stocks in that index are under accumulation. Logic would tell you if that's the case, the index is probably going to trade high. The reality is it's not the number that counts, it's the direction that is important. You can see the prior week, the Dow had 74.9% under accumulation. This week it's 54. That's a significant drop, even though it's still rated positive. Okay, you see what I'm doing? Yeah, now the next question has to be, well, how do you guys determine whether it's accumulation or distribution? So for that, we want to jump over to our second opinion screen, and I'll give you an example. This is everybody's favorite stock, NVIDIA. Rachel, if you scroll down to the middle of the page under volume analysis, I can show you what's up. Now, under volume analysis, in the center of the screen, you see average volume, monthly change. The third item is up-down ratio. Now, this is very important. With everything in MarketEdge, you click on the question mark and you get an answer. This is the 50-day ratio of the stock's daily up volume to down volume. It tells you exactly here how it works. When it's closed up, we add up the volume. When it closes down, we add up the volume. And it gives you a number, a ratio of up to down. So obviously, up, if there's more volume on up days, it's good. If there's more volume on down days, it's lousy. All right. So now, with this particular case, the up-down ratio is 180, right? Now, this is in the video, which has been nothing but on its tear all year. And yet, it's still under big-time accumulation. And what we found out was that's fine. But what's really good is to know what the direction of this number is. So what we developed was what we call the UD slope, up-down slope, which is a regression line of the various up-down ratio readings over the last 30, 40 days. So we have a scattergram, and that's different numbers, and the regression line finds the center of the numbers. So if the slope is pointed up, that means these ratios are getting bigger and bigger. If it's flat, it's flat. If it's pointing down, it means that the up-down ratios, although they might look like they're strong at 1.6 or whatever, they're actually declining, very much like we saw over in the market letter. So if we bounce back on NVIDIA, you could sit there and say, well, this stock's not a run. I don't think it's going up much higher. And you look at the ratio, 1.8, the slope's up, which is very bullish. These two indicators are part of our power rating, which forms our opinion. You go on to the top, and guess what? Our opinion, we have a power rating of 84. The opinion's long since May 16th, and the stock's up 30% since that time. So if we go back to the market letter for a second, Rachel, we'll wrap it up. You want to check this every week. You always want to know what our market posture is, and the way you know it we tell you in the verbiage up top, but also you'll see right here, -3, 6, and -2. And again, with the strength indexes, as of last Friday, you can see that they're 54, 51, 48. But what's real important is that the Dow's down from 74.9, NASDAQ's down from 71.6, and even the S&P, which is at 48, is down from 68. These are serious, serious declines. And if you read our market letter, you'll see that while we're neutral right now we're getting ready to go bearish. And these are the reasons you're looking at why we're doing it. We're not guessing. We're just reading the numbers. Does that make sense, Rachel?
Perfect. Thank you very much, Vee. Is there anything else you'd like to add?
No.
Thanks for watching. You can learn more about our finished technical stock research at MarketEdge.com. If you have any questions or specific topics you'd like for us to cover, please send us an email to support@MarketEdge.com.